Hi everybody, this is Mark and welcome to my channel as well as my inaugural first video. I'm a real estate investor, so this channel is going to be mostly about real estate. I love discussing it and I'm hoping to set up a nice community where we can all discuss and share information. I also enjoy business and personal finance, so I'll probably throw a little bit of that in there as well. My original intention was to make this sort of a video blog about what my current project is, what I'm working on, challenges I'm having, hopefully some success as well. I do plan to do that, but I wanted to start off these first few videos. I've been watching a video by someone that, if you're into this kind of channel, you're probably well aware of him. His name is Graham Stephan. He's an extremely successful real estate investor. He's been extremely motivating to me, and that's actually why I got started on this type of a channel. So I wanted to react a little bit to his videos, and then Graham, if you're listening, you can react to my video, and so we can get that sort of Russian nested doll thing going on. You can also have your girlfriend react to my video reacting to you, so you get a twofer there. And I'm going to break these videos up into bite-sized chunks, so there's going to be a few of them, and if this type of format and content and subject matter seems interesting to you, go ahead and press the like button and subscribe if you like.
Because I know, at least for myself, I really enjoy seeing how other people manage their money and where they invest it, and plus I'm just curious where all of their money goes. So given this, I'm really hoping this video is going to open up the dialogue for other people to share their investment portfolios as well and go over how they were able to do it. I knew that most of those renters I was working with would one day turn into buyers, so I did everything I could to exceed all of their expectations. With the expectation, of course, that I would then get the opportunity to represent them anytime they wanted to buy something in the future. And most of the time they did, and that's where I ended up making most of my money. I continued on that trajectory, saving almost every single penny I possibly could.
I agree 100% with this. I love this idea. I'm extremely grateful that Graham was willing to be as open as he was about his deals. The two questions I always ask when I'm talking to someone about their real estate deals: one, how did you find the deal? And two, how did you fund it? So how did you come across the deal and you knew it was a good deal, and then how did you pay for it? And Graham's extremely open in that, and I really respect that. And once those two things are in place, you know where the deal is and you know how to find it, everything else falls into place. Then the third question I will sometimes ask is, are those repeatable? In other words, is the funding still there, and can you still find deals that way? Or is it just something that time has passed, that maybe that funding isn't available anymore, or maybe the deals were so good because the economy was so bad? And I'm going to go into detail on both of those in terms of my past in a future video, and I'll definitely be doing this. Because the thing about Graham in this video is that he's extremely detail-oriented. He's very good at making and keeping relationships, which is extremely critical in relationship, which is extremely critical. In this particular video, we find that Graham is extremely detail-oriented. He's great at making and keeping relationships. That's how he was able to build his business. That's very important in any business, but especially in real estate, where you're always working with people, be they renters or sellers or buyers. He's also extremely frugal. He's got this mentality that he's going to save every penny he can. I know he lived with his father for a while, so he didn't have rent. He's famous for his 20-cent coffee, and that was the springboard that really allowed him to get into real estate, because then he could afford to pay cash for his property, which not a lot of people can do. And that takes a lot of the risk out of it, because of course you don't have the mortgage to pay. You still have your property taxes and your insurance, and then maybe a tenant will move out and destroy the property, but at least you don't have the mortgage to pay. Because real estate is not a risk-free investment. And I know paying cash probably gave him the confidence to go ahead and take that plunge, because, as I said, it's not a risk-free investment. And none are, but especially real estate, because it's not liquid. You can't just, like a stock, sell it tomorrow. It's going to take you time to sell it. You may have to fix it up or get a lower price. And so you can't just get your money out. So once your money's in, you're sort of stuck. And of course, there's always the possibility of a tenant destroying your property, not paying the rent. You have to evict them, and the financial headaches that can cause. All of these characteristics, being frugal and being a risk taker, would eventually set Graham on his path to financial freedom. Saving and investing is absolutely critical in early life, because the money is like a snowball at the top of a hill. It starts out really small, but you start to push it downhill. It picks up and picks up and picks up, and by the time it gets down to the bottom of the hill, it's a huge boulder rolling downhill. And that's what happens with your money as well, because when you start out early, then your money grows, and then when you reinvest it, that money grows. So you've got more money growing each and every year.
Properties were selling for less than half of the price they were a few years prior, and it was at that time that I started to see a lot of very smart, wealthy investors scooping up and buying properties left and right. So I saw all of this start happening firsthand, and that made me think to myself, wait a second, if all of these smart, wealthy people are doing this, then maybe I should look into this too.
There are two pieces of genius here. First is looking at what smart and experienced people were doing, because he was very young and he didn't have that experience. But since he was effectively piggybacking on their experience and their actions, he was getting very wise, very experienced mentors for free. I've always said that you can be a star or you can hitch your wagon to a star. And when Graham was so young, he was able to hitch his wagon to a star. Two pieces of genius here. First, looking at what smart and experienced people are doing. Effectively, he was getting very smart, very expensive mentors, and he was getting them for free. I've always said that you can either be a star or you can hitch your ride to a star. And Graham was smart enough to recognize the opportunity that other people were taking advantage of. He was extremely smart. Second is when he bought. As he mentioned, prices were down 50%. So effectively, Graham was buying real estate on sale. But it takes a lot of courage to buy when prices are plummeting and you don't know where the bottom is. So you're effectively going against the grain. You're buying when everyone else is selling. And that's how you make your money. There's an old saying in real estate that you make your money when you buy. You don't get paid then because you got to cash out, but that's when you make your money, and then you get paid later. Second, he was buying from a bank, and so there's no emotional attachment there. It's not their home. They haven't been living in it. They haven't raised their kids there. It's just a house to them. It's not a home. The thing is that for a bank situated like this, it's not an asset. It's a liability. It goes on their books and it's a problem. It's a problem that they just want to get rid of. Banks are in the business of making loans. They are not in the business of owning homes. And then they don't want to do it. So after Graham bought the house, it was just a matter of sitting back and waiting for the market to recover. And in California, it was definitely going to recover. Now, it may not have been clear when. It might have been a month or 6 months or 2 or 3 years, but it would eventually. Some people say that housing in California never goes down, and that's simply not true. It does go down. However, if you look at the trend line is up and to the right. So that if you take a point in time and then you look 10 years later, prices are going to be higher than they were 10 years ago. The other thing about California is that when prices do go up, they tend to go up at a 45. They go up really, really steeply. So they may plateau for a little bit. It's sort of like a stair step. They may plateau a little bit, but when they go up pretty sharply. And that's how you get paid. Graham was bold enough to buy when the market was bad, when everyone else was saying, I don't want to buy, I want to sell. He was extremely bold. That's the end of the first video, and so if you like that, go ahead and watch out for the second video. It'll be about Graham Stephan as well, but it'll be a slightly different topic, same type of video, but it's basically talking about long-term real estate and how extremely frugal it is, and I hope you'll find that interesting as well.